going to go into some, I guess, the purchases that we've done this year. So spent a bit of time on this, and I hope everybody gets a little bit of information out of it. So here at an advisory level, we've been buying property for clients now for quite a few years. We will go through some more high-level data in maybe potentially the next mastermind session. Ian's been doing a really thorough review on all purchases that we've ever done. But what we've got for today, we're actually going to go through purchases that we've done across the year, kind of volume, some key statistics regarding that. We're also going to go into, how some of it's actually performed. Obviously, we're talking about this year, so it's kind of hard to go through maybe all of those properties because they might not have had a lot of time to mature for a lot of them. And I'm not sure if Ian actually had time to get through them all yet either. He's got a mountain of work to get through doing that thorough review. What's pretty interesting, and that will come out when we do maybe the next mastermind or the one after that, is some of our earlier purchases are now actually getting a second win. Those purchases that we did in 2018, they were already sitting at a really healthy CAGR rate of over 10% for that period of time. They've actually picked up because again, they've got that second wind going through those areas that we've purchased in. So it'll be an interesting one to review the full review. But for this one, we're doing a review for 2024. So let's get straight into it. So just going through by the numbers. So we've actually, and I've gone real specific here. This is a live as of today. So there'll definitely be some numbers come through still till the end of the year. So I think we'll crack the 400 plus for this year. So that we put through 391 offers accepted. That means essentially 391 of the offers we put down on a property were accepted, and we're in a position to buy those properties. However, we only purchased 359 of them. Now, there can be various reasons why we only transacted on those 359s. More often than not, it's going to be something that's been pulled up during the due diligence process once the offer's accepted. So whether that's been a building and pest inspection, whether that's been council searches, maybe some other gremlins that we've dug up along the way post that offer being accepted. But it's still this one surprised me a little bit because I always thought it was somewhere in the 80s, but it was around a 91.8% pass rate. So again, a lot of purchases, really, really thorough due diligence by Tommy and the team there, which is really impressive. So if I keep going through the numbers, so like I said, 91.8% pass rate, which was very surprising for me to see when I went through those numbers. So there's $194.4 million worth of assets at purchase, so that they're actually at a higher level than that price-wise as it sits right now. But that's what we've accumulated across that purchasing thus far. The average purchase price was $508,000 and the average yield was 5%. So that average yield's come down a little bit from the prior year. It was about 5.2, 5.3 last year. You guys might have heard me talk about that previously, where we're seeing the rental growth slow down, but property prices are still kind of trucking on. So that average yield is definitely coming down. It'd be interesting to see what happens in 2025 if that rental yield, it's that rental pricing doesn't continue to grow again, because I guess everybody was chasing higher yields to offset those interest rate hikes or potential further interest rate hikes, but that's now kind of come down. The whole spin, everybody thinking there's positive cash flow properties, it's just a fallacy in the current market when your interest rate's 6.5% for most people. So the average yield's definitely come down, and even investors that I speak to, they've seems the market is started to realize that cash flow positive is not really a thing in the current market. But we're going into the next one. So I guess key property info, I really tried to break it down, and I thought it was interesting because I've never really looked at these kind of specific stats before on our purchases as well. So the average build, so obviously it's no secret that we purchase only established properties. So the average build year was 1978. So we're talking, the best part of, nearly 50 year, 55, or was that 45, 46 year builds. 60% of them are brick. So this is a question that I get asked sometimes from a strategy level, or a question that I get is Is it because it's a brick or a weatherboard home going to affect my performance? I can tell you conclusively it has zero impact on your performance of your property. In some areas, those weatherboard or clad homes are going to be more desired than the brick homes. Other areas, they're going to want brick homes. But 60% of them are brick, 40% were a mixture of weatherboard, clad, or sometimes they're brick and weatherboard. So I just separate it as purely brick and then the rest at 40%. The median land size was 674. That's bolstered a little bit by the regional purchases, particularly some of those LGAs, which will come through in a moment. They were significantly higher square meterage of land than what you get in your metro locations. But that's, obviously land value is what increases over time. The average land size across the country is just getting smaller and smaller each year. So again, it just really goes back to one of the group's questions earlier in terms of that price correction. If we're purchasing assets with high land to value ratio, and we're buying assets too that are at a price point that's close to or even sometimes below construction costs. I know one of our clients, Nathan, he's probably tuned in. He normally tunes in. If he doesn't, he'll watch the recording. But I know he's made a purchase with us in WA, and then when he got through an assessor to do the kind of the valuation of the property, for what it would cost to build versus what he purchased the property, he wouldn't be able to kind of get that done in today's dollars. So again, that high land to asset value ratio is really important. Interestingly, the oldest build, which was a property up in Rockhampton, I believe, was 1900. So we're talking about a 120, nearly 125-year-old building, which I thought was pretty cool. And the newest build, funnily enough, also in Rockhampton, was a 2021 build. So again, age of the property is completely irrelevant to performance. It's all going to come down to how well that property's been taken care of, how it goes on the building and pest inspection. But I thought that was a cool little quirky stat that I pulled out there. To go down to a breakdown as well in terms of the percentage of bedrooms. So majority of the properties we purchased are three-bedroom homes, so 56.5% three-bedders. I had a look at that as well. Most of them, a large portion, I've actually got the some of the figures here. I didn't have time to put it into the sheet as well, but what would that make up? So three-quarters of those three-bedders were 3-and-1s. So again, whether you're getting a 3-and-1 or a 4-and-2 isn't going to impact the performance of your property. It will impact the price you pay. That's for certain. When I went through the data, obviously it's more expensive to buy a 4-bedroom home than a 3-bedroom home in a similar location. But that was an interesting one. Then we've got nearly 40% of properties were 4-bedders. And then the next one there, my little grammatical area here, were 5-bedders. So they'd probably be categorized as 4 plus a study. So just some key property info there, which I thought was some cool stats to go through. And then I wanted to go through a state breakdown because you guys have probably heard me in the previous mastermind sessions, talking about, we try to not to give away too much of the specific locations of where we're buying to respect our clients. But what percentages that we're broken down? This one's interesting because I would say at the start of the year, we really kind of gradually built into Victoria, and Victoria now is making up nearly 50% of our acquisitions, my last kind of 60 or 90-day check. And then there was still some little drip feeds of WA. Queensland was still being represented, but we can see here WA's made 11.6% of purchases. And I get asked this question in several masterminds, and I don't always have time to get to it, but WA is still a buy. It's just simply that it is so hard for us to find properties that pass our checks, particularly from a pricing standpoint. And the amount of competition you are facing when buying a property over there makes it near impossible to get a deal done. If I was to get the stats in terms of percentage of properties presented versus successful offers, it would be very, very, very low for WA. So it's not that it's not a no buy, but it's just really, really hard to get a deal work through to firstly get your offer accepted, and secondly, buy at a good, reasonable price. I know a lot of buyers agents who are still buying heavily in WA, they are running into bank valuation issues over there because they're paying above the odds to secure the property, which is something we don't do. And again, it's part of our due diligence process of what we go through before we assess a property. Regional New South Wales, this is essentially all regional New South Wales here in this 6.4%. And again, that's something that's probably started to gradually build throughout the year. Thought an interesting one before I come back to Queensland is Tassie at 8.6%. I guess to highlight to people, though it might look like a small number, this would be the number one state we're buying in terms of as a percentage of available stock on the market. There is nowhere near as many listings coming through that Tassie market, particularly, we're buying, it's no secret we're buying heavily in that kind of Lonnie and Burnie area. We're not in the Hobart market yet. That's probably more of a watch at this point. But that would be our number one conversion area. So if we had similar amount of listings, Tassie would be at a higher percentage point here. But again, and then Victoria's coming in there probably at second. A lot of the purchases in Queensland are regional Queensland. There has been some metro purchases. They were more heavily weighted towards the front end of the year. And then there's just been the odd purchase in SA, not really much to speak of there. But love to know your thoughts. Just feel free to spam the chat at the moment what you're having a thought about the state breakdown. It just gives me some stuff to mull over for the next one. I thought it would also be cool to go through the top 5 LGAs. So these are just in the top 5 as a percentage, and these top 5 are making up, just coincidentally, they make up about 50% of our purchases at the moment. So we can see coming in at 5th, we've got Gladstone in Queensland. The Queensland section's been cut off. Then it's made up 15% of the top 5. So essentially about 7.5% of purchases. Then at an equal 4th and 3rd is Mildura in Victoria and Launceston in Tasmania. So again, they're representing close to 8% of purchases for this year. And again, like I mentioned, these two in particular, not a whole, there's similar population. Mildura is a little bit smaller actually. So it's not like they're getting an abundance and hundreds of listings coming through each week. So we've really got in there and established ourselves well in those markets and they're performing quite well. Then coming in second is Bundaberg, which we've been in there for a little while now, but it's still performing exceptionally strong. And then coming in at first place is Latrobe in Victoria. And I think outside the top 5, there was still in, 7th and 8th, and there was a couple of more Victorian locations as well. So Victoria started to really build throughout the year. It's probably a story of two halves where Queensland was represented more in the first half. Still being strongly represented, but definitely Victoria's come through in the back end of the year. But again, love to know your thoughts. Again, this only makes up 50% of our acquisitions. So there's still a lot of LGAs out there which have got the tick of approval, but it's only about 1.5% of suburbs across the country that really have our eye at the moment. Then I thought the big one, which I get asked all the time, and Ian's spent a fair bit of time putting this together for us today, or for me, really, to then package it up. So the growth by the numbers. So what we've done, we haven't gone through the full review yet. We've looked through January to June. It's probably also a fair assessment because they've had some time to actually grow. But there was 156 purchases made. So that's successful purchases, not offers accepted. And just under $84 million in assets purchased over that 156 purchases. And then as it sits in terms of today's value, we're talking about $99 million in property value. So that prorated CAGR return is looking at just under 18% for the whole year in those first 6 months, which is exceptional. If we were to compare that to the national average, so the national average this year, it depends where you're reading it. I've gone with the highest number. So CoreLogic is stating that's about a 5.5% number for this year. I've used SQM research. They've listed it at about a flat 8% growth. So even if we're using that national average of 8%, the Ripehouse team and the algorithm that sits behind it as well has outperformed the national average by 224%. So hats off to those guys. I'm not involved in that, so I'm not going to take any credit for that. So hats off to the team and the algorithm there. They've done really well. And in terms of growth, the average growth per property is $96,500. So we're talking about, in terms of a difference, the national average, if you got the 8%, assuming it's 8% again, like I mentioned, you got 53,500. So you're talking about a $43,500 swing just in the first year, which is a little bit over a 7 times return on the buyer's agent fee. So I thought that was some cool details. We're definitely going to have a more thorough review, and we'll release that for everybody to take a read through in terms of previous year purchases, where they're sitting. And the whole year is really hard because if we're trying to review how November's purchased here in December, kind of really wasting our time doing that. But I think this one gives everybody a little bit of insight as well. But we might be in for a bit of a shorter session for today. I will just quickly pull up my spreadsheet because I haven't had the time to go through the thorough analysis like I normally do. I've been poured into getting this one ready for everybody today. But if you haven't, feel free to just drop some more questions in. We'll probably have a shorter session today, but for those of you who followed us this year and even in previous years, really wanting to thank everybody's support throughout the year as we move into 2025. We're definitely looking to ramp up our the frequency in which we have these mastermind sessions every 3 weeks. They'll always be scheduled in so people can come along. We're also pretty committed to make sure we're getting out new content on the YouTube platform. That'll continue to ramp up into 2025 as well. And we want to make sure that we're giving you kind of updates in terms of, where we're buying loosely, not specifically. Again, we want to protect our clients as well, but and also how we're performing. So for everybody who's followed us along this year, I really want to thank everybody for their support. Wishing you all a very Merry Christmas and a Happy New Year heading into 2025. And hopefully you guys just keep following on, and looking forward to speaking to you all in the new year as we'll kick off. And the next session that we'll be having, that will be on January the 7th, that we'll be having the next mastermind session as well. So from everybody here at the Ripehouse team, guys, thanks so much for your support, and looking forward to speaking to you all again in 2025.